Good morning. We will pay attention to ledger accounts and the note for the current accounts in a partnership. The balances are given at the end of the month. Now remember that the capital balance will be at the end of the month because they could have increased the capital during the year. The current accounts will always have balances at the end of the previous year, so it's my opening balance, because we never write in the current account during the financial year, only when we distribute the profits at the end of the year. The drawings account will have balances at the end of the year, because at the end of the previous year we closed our drawings account to the current account. They've already completed the profit and loss account and determined that the profit is 280,000 after all the deductions for expenses. So the 280,000 can be distributed between the partners according to the partnership agreement. We will start all these accounts with the balances that is given in the trial balance, and then we will do the adjustments. Rose took merchandise cost price R1,000 for his personal use. No entry has been completed for this, so that means that we must go to the drawings account of Rose and show that his drawings increased with R1,000. The drawings account had a balance for entries already completed of 45,200. We will debit the drawings account with the additional 1,000 and we will credit the inventory account. The partnership agreement stipulates that Roos will receive a monthly salary of 5,000 times 12 to determine what is the annual salary, and Thorn will receive a salary of 3,500 per month times 12 months. The first entry that we will be completing is the adjustment to increase the expense account and indicate that the money is owed to the partners, crediting the current account. The salary of Rose will be debited with the 60,000 to increase expenses on the debit side, and we will credit the current account of Rose with the 60,000 to indicate that the business owes him money. Any expenses that must be paid to the partners will be taken to the current account to indicate what is the total amount that you have to pay them. It will not be taken to the accrued expense. So normal expenses that is not paid at the end of the year, you will debit the expense account and credit accrued expense. If this expense must still be paid to the partner, you will complete the adjustment, debiting the expense account and crediting the current account. In the account of Thorn, the salary will be debited with 42,000 because that is his expense for the business that increases on the debit side, and we will credit the current account of Thorn to complete the adjustment. So the first entry that we will complete is the adjustment to create the expense and then transfer that expense to the current account. The second entry that we will complete is to close off the expense account and transfer it to the appropriation account. So that is a closing transfer. So we will credit the account of Rose with 60,000 and we will credit the salary of Thorn to close the account with 42,000, and these amounts will be transferred to the appropriation account. The appropriation account will be debited with the salary of Rose and the salary of Thorn to complete the closing transfer. Both partners are entitled to an interest of 10% per annum on their capital. On 1 September, the partners decided to maintain an equal capital balance And to achieve this, Thorn deposited another 40,000 as capital contribution on the 1st of September 2015. So if we look at the current capital account of Rose, he had 200,000 for the whole year, so he will get 10% on 200,000. That will give him 20,000 rand. On the capital of Thorn, his opening balance was 160,000. That was increased on the 1st of September with 40,000. So it means for the first 6 months, he will receive interest on 160,000. And for the last 6 months, he will receive interest on 200,000. We complete the adjustment and we debit the interest on capital account to increase the expense for the business, and we will credit the current account of Rose with 20,000 and the current account of Thorn with 18,000. So the expense is increased on the debit side and the current accounts are increased on the credit side to indicate that this money must still be paid to the partners. So therefore, we've completed the adjustment, debiting interest on capital, crediting the current account. We will now complete a closing transfer to transfer the interest on capital to the appropriation account. So the interest on capital account is closed off on the credit side with 38,000. To close the account, and the amount is transferred to the appropriation account on the debit side, 38,000. So my first entries will be to complete the adjustment. Then the second entries will be to complete the closing transfers. And then we will work out what is the remaining profit that will be divided between the partners. So the total profit that was available for the partners are 280,000 minus the money that was already taken out of the 280 for salaries and interest. And if I subtract that, it means there's 140,000 left over. They divide profits equally, so each one of them will receive 70,000 rand of the profits that's remaining. So we will debit the appropriation account so that we can close our appropriation account, and we will credit the current accounts to indicate that this money must still be paid to the partners. So on the credit side of the current account, we recorded all the money that must be paid to the partners and that they are entitled to. Remember, current account, drawings account, and capital account is equity. Equity increases on the credit side and decrease on the debit side. So if we want to increase the equity to show that there's more money in the business that belongs to the owner, we have to credit the current accounts. We will then transfer the drawings to the current accounts so that we can see how much of this money that is owed to the partners were already taken by the owners. We will close the drawings account of Ruiz, crediting the account and debiting the current account of Ruiz with the 46,200. Then we will also close the drawings account of Thorn with 38,400 and debit the current account of Thorn with 38,400. If we calculate the balance in the current accounts now, we can determine what is the total amount that's outstanding that belongs to the partners and that they are entitled to. So Ruiz can actually withdraw 94,200 that is owed to him, and Thorn can withdraw 97,000. If one of them had a debit balance, it indicates that he took more money than he was entitled to. That means that he will owe money to the business in the next financial year. When we complete the notes for capital and current account, it is a summary of all the entries in your ledger account. So Ruiz started with 200,000 Rand balance. He didn't contribute during the year, so it means his balance is still 200,000 at the end of the year. Thorn had an opening balance of 160. He contributed additional capital of 40,000 and his closing balance is therefore 200,000. In the current accounts, we will complete a summary of all the entries in the current account. So first of all, we will see what is the amounts that was paid to the partners, and the business must pay them salaries, interest, and their division of the profits. So we will first show that the accounts were credited with the salaries and the accounts were credited with the interest. Then we add up and we see the primary distribution is 80,000 and 60,000. Primary distribution means that even if there's not profits in the business, they are entitled to their salary and interest on capital. If there's any profits left over after the primary distribution was made, then there will be a final distribution of the amount that's left over. So the total amount that's left over after the primary distribution is 140,000, and because they share profits equally, it means that we will show that each one of them will get 70,000. And that will give us the profit according to the income statement. So I add up each column. Rose 150, Thorn 130, that adds up to 280,000. If we look in the appropriation account, you see that the profit is 280,000. After we've written the salary, interest, and the division of profits in the current account, there we showed that the total distribution of profit for the year was 280,000. So that's an indication that we didn't make any mistakes. In the note, we've recorded the three amounts on the credit side of my current account to show the amounts that must be paid to the partners. Now we've determined what is the total amount for the year that they're entitled to. So the next thing that we will do is we have to show the balance at the beginning of the year. So I go and I say the current account of Ruiz has a debit balance. Now remember, the equity increases on the credit side. So any amount on the debit side will be a negative figure. So in the note, we will show this balance as a negative figure and we will show the drawings as a negative figure. In the current account of Thorn, the balance is on the credit side. So therefore, we will show the balance as a positive figure and we will show the drawings that's on the debit side as a negative figure. Okay, so the drawings for the year is negative and we will deduct it to see what is the amount that's left over that they're entitled to. And then I will show my balance at the beginning of the year as a negative balance for Rose because he had a debit balance at the beginning of the year, and any of the amounts on the debit side will be negative figures. The account of Thorn had a positive balance at the beginning of the year, therefore it will be a positive figure. And then we can calculate what is our closing balances. If we complete the note for the current account, the amount that we get in this note must be equal to the balance in the current account, otherwise you made a mistake. And if we look at these balances, we see that they are correct.